Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about BTCUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking first the commitment of traders, so what the non-commercials are doing on Bitcoin. Then we will be moving to the on-chain data, so to see how Bitcoins are moving on and off from exchanges, the new supply emitted into circulation. And by the end of the video, by putting together all these different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this market. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, the first thing that I want to speak about is market cycles. What we can notice, in fact, is that the level that the market is currently rejecting, if we zoom out from here, is exactly the previous cycle high. From here, the previous bear market was created. Here we had the halving, the market entered into a bull market. Then we had the bear market. The market went and tested exactly the previous cycle high. Now it is rejecting it to the upside. And currently, the market is trading around the previous all-time high. Now, as the market is testing the level, we have to identify the structure more clearly, because we are testing the previous all-time high, but we are testing it as support, because at the moment, here is where we had the previous monthly closes, and there is a quick trick that you can do, which is going down on a line chart, and you can easily identify how this is the resistance, which is now turned support. So the market is currently testing previous monthly resistance turned support, and we just had the halving around this area. So from a technical perspective, everything seems quite bullish, and there is a possibility of seeing more bullish continuation away from this level. We can also notice that as we have an impulse and correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how the 0.32 is a bit lower. So there is a possibility first to see a bit of a deeper correction for the market to go and reach this 0.32 and then to see the continuation to the upside. So still the market seems a bit overextended to the upside and in need of a deeper correction, but overall the structure is very bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the market just started creating a bullish pattern, which is this weekly M pattern. Now, generally speaking, after the creation of an M pattern, what you would expect is a rejection to the upside, at least for the market to complete the pattern at the neckline, so the previous support turned resistance. This is a very common pattern in most markets. If you look also left, we can see that we just had one here. We had this M pattern here. The market, in fact, then created a rejection to the upside. If you look left, we can see, for example, here we had another M pattern. After the M pattern, the market created a rejection to the upside. So it is a pattern that we speak about many times in the Forex market, but is also present in the crypto market. And this level at the moment is also quite strong weekly support. All this zone, it was also the previous resistance from which this red candle was created, which is now turned support here. So there is a possibility for a deeper test of this level, which also has the 0.32 that we have identified on the monthly in it, and then to see a potential rejection to the upside. That is definitely a possibility. Let's keep that in mind and drop down on the daily time frame. Well, from a daily standpoint, the market definitely seems to start to get overextended to the downside, and in need of that rejection to the upside that we are currently identified on the weekly and monthly timeframes. But before we go more into detail here on the daily, first, let's go and see what we have when it comes to the more fundamental aspects of this market, of these markets. Now, if we look at the commitment of traders, we're essentially looking at the non-commercials. So big hedge funds, speculators, essentially institutional speculators. So institutions that are in the market to actually make money. And the way in which they're positioned is now much more bullish than what they were during the bear market, where they had minus 2.3k net positions. Now they have a quite strong net positioning compared to what they had previously. So they're starting to move back to the bullish side for BTCUSD. And if we move to the on-chain data, there are two important metrics that I like to look at. The first one is the exchange reserves. Now, this is the amount of Bitcoins currently held on exchanges. And why it is relevant? Because it is a quite important measure of the liquidity, or better said, the illiquidity of the market. The purple line here is the amount of Bitcoins on exchanges. The white line is the price. And as we can see, during the bear market and now also during the bull market, in both cases, the amount of Bitcoins on exchanges, so the purple line, has only been dropping over and over again. Now, what this shows is that many Bitcoins are getting bought and moved away from exchanges. And those are less likely to be sold back into the open market because they're not even on exchanges yet. Therefore, it is strong for the fundamentals because it indicates a decreased likelihood of seeing that selling pressure hitting the markets. The other important metric that I like to look at is the supply, and more precisely the new supply. And what we can see is that if we zoom out, every 4 years we see a massive drop in the purple line. Now, as I was saying, the purple line is the amount of a new supply emitted into circulation. And we just had yet another drop in that new supply emitted into circulation. These are essentially the representations, the actual on-chain representations of the halvings. So the cutting in half of the reward given to miners, essentially. And this is very strong because essentially as demand, even if it remains the same, the new supply emitted into circulation gets cut in half. This is supposed to create a supply shock, which could be absorbed if the price starts to increase, essentially creating new potential selling pressure. And that is how essentially markets work, by balancing supply and demand. But if the supply gets cut in half, that is strong for the fundamentals. So let's keep all of this in mind and move back to the chart. Well, in a situation like this, as we were saying, all this area is an area in which we have the possibility of starting a reversal for the completion of that potential weekly M pattern. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the CO2 data and the on-chain data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying the early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing that weekly M pattern. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.